One of Australia's biggest wealth managers, Perpetual, has sought to reassure shareholders about a takeover offer from a US private equity firm. Perpetual also says that it will consider demerging its trust business from its investment management business. At today's annual general meeting, the company issued a cautious outlook as the global economy recovers. Here's Simon Palin.
Firmly at the top of many Perpetual shareholders' minds is the takeover proposal from US private equity firm Kohlberg Kravis Roberts.
I hate to see so much control of Australia going overseas. KKR are just, as far as I'm concerned, are sharks.
We prefer they didn't sell it. We don't really have a lot of respect for KKR. They're probably one of the best asset strippers around.
KKR has made a non-binding proposal to buy Perpetual for up to $1.75 billion.
I'd be inclined to reject the offer at this stage. I don't think it's enough.
Perpetual is an icon in the industry and it should not be broken up.
At today's AGM, the wealth manager's chairman-elect sought to reassure shareholders.
While your board is considering the KKR proposal and related issues, it remains business as usual for Perpetual. We will continue to manage the business and make decisions that are in the long-term interests of our shareholders.
Perpetual said yesterday KKR's bid undervalues the company, but that it would continue negotiations to see whether an acceptable offer can be achieved. And there are other options on Perpetual's table. One shareholder suggested it should also consider demerging its trust business from its investment management business.
On the issue of demerger, I think the best thing for me to say on that is that I will ask our new chairman to put that on the agenda.
KKR's interest in the fund house comes as Australia's wealth management industry is tipped to grow at over 12% a year for the next 5 years. The growth forecast is pinned on compulsory private pension contributions and a booming resources sector.
Well, there has been a broad market trend over the past decade towards passive investment strategies. We believe demand for actively managed funds will continue.
But the takeover target has issued a cautious outlook. Perpetual expects its first half underlying profit to come in at $35 to $40 million if equity markets remain stable. The company's chairman says the global financial crisis is still weighing on its business.
Although there was some improvement in retail investor confidence during the year, it still remains very fragile, and the industry as a whole continues to suffer from very weak inflows.
Perpetual shares ended the day unchanged at $37.90. That's slightly lower than KKR's offer price of between $38 and $40 per share.